Hello everyone, welcome to my channel. Before we proceed, please read this disclaimer. Thank you. So the market today, we had a drop in the market today. If you had gone through my previous analysis where I said whether October will be October or Hottober, meaning whether we're going to go up or we're going to halt the movement or the rally. Today we dropped, although we are expecting this 7-day moving average, but the market is overly extended and I am expecting a pullback. I cannot just say it's going to pull back, but I don't know whether we are already at the beginning of the pullback. If you look at this volume, it's quite it's more than the average. Here we had a sell which brought these buyers to buy back, and now another sell that is above this average. If it's going to pull back, are we going to stop at this area where we have this big volume here around 590, or the next place where we have another big volume is here of buyers? Are we going to come here? Looking at this, let's look at the Fibonacci retracement. You can see that this 23.6 area actually match with this particular blue line, the below one, this particular area where we have these strong buyers. So I will expect that the market will pull back to this area for us to start buying. But is it when it pulls back to this area we will start buying immediately? No, we need to wait for participation. We need to wait for the institutional buyers to get into the market. That means when we get around this area, we will expect a big volume as well. For example, it gets down here, let's say this area, it gets down this area, for example, we'll be expecting a huge volume that spikes like this above the average. See, something like this kind of volume to get back there to show us that yes, there's a participation, and then we can be able to start preparing for our buying. I'm using QQQ because it's the ETF and it's kind of clear when it comes to looking at the volume analysis. That is why I'm using QQQ. Something like Meta, that is Facebook, already have retraced towards that area. So I think this will be, if the market is retracing, this might be doing some consolidation around this area, and possibly will be leading the market before the market even turn up. Maybe Facebook might be leading the market. If you can see here, we have also you see this 23.6 area. Can you see it? We have already dipped in there, and there is a big volume. You can see the volume here, right? You can see the volume, a huge volume as well that entered to maintain this. Let me take away this so you can be able to see what I'm saying. So you can see here we had a gap up around this area. Yeah, it's reddish, but it's a gap up just that it closed red, so this is counted as a bullish move. So this area, which is like a low volume area where there is no transaction, we came there, we were not able to see, there was no huge volume, no participation here, no huge volume around this area to show that there are participants. So buying here will be like a risk because there's no huge volume that entered here. Then coming down here, a huge volume has entered. We will have a problem here, like a resistance here, which is an average, more than average volume, and here this one is just below, so no problem. The next one will be this, which is just here, but no problem. Here will be another bigger issue when we get up there, but for now we have to clear this particular volume to know that yes, this is about going up. We might stock up in a range, this area, before going above here and coming above this 50 RSI, and then we start buying. CROM, I talked about it, that was yesterday. I said if we are able to break this volume here, this particular one, which today we went up and then failed, so we didn't break it. So, and I said if you bring it to the weekly, I said we should watch this purple line, which is the 20-week moving average. That is where we have here drop down, here drop down, so it has been serving as a resistance. So after this consolidation here, we're expecting to break this 20-week moving average, and then we will now start buying. These stocks are not stocks that you buy and then sell the next day. It's something you buy and then you hold. I am not into buying and selling the next day. So let's go back to QQQ. I should have been using NASDAQ to do the analysis, but the problem with NASDAQ is the volume analysis is like not so clear. You can see only this particular place I can see a very strong spike, which is not counted because it's not at a strategic position. That's why I like to use the QQQ, which is the ETF of NASDAQ. That is where I see the volume clearly. It shows me how the participants, the market, the buyers and the sellers participated in the market. So you can see, I like to see where I have these huge volumes. It's very important to me. When it drops, like I'm seeing it maybe close to the moving averages, and then it really brought rally into the market, then it matters to me. These ones doesn't matter to me. Here, this one matters to me. So that is why I am making this analysis that if the market have started the pullback, but if we break this line, this particular 609, the market might continue up, but I will not participate. I have my stocks like the AMD, Microsoft. I have those stocks. I'm not going to sell them. I have taken half of my profit and I left the other half there. I'm not going to sell them. I'm just going to wait for the market to start correcting, because we have really gone up a lot, and I am expecting a healthy pullback, which pulling back to this point won't even be a healthy pullback for me. I'll be expecting the market to come within this second box. Then I will look out for the strong participants, the participation of the bulls. So once the bull steps in, I will see it with a strong volume, and I'll start to prepare for my buying. So that will be all for tonight. I'm just making this 6:47 p.m. If you still have a lot of stocks in the market, maybe you should start reducing your exposure, because we should be expecting a pullback soon, sooner than you think. Thank you.